When it comes down to the top financial channels on YouTube and the topic of real estate, I have got to give it up for me, Kevin. All the other financial channels are always talking about ROI and cash flow and saying that these are the top factors that it comes down to when prioritizing whether or not you have a good real estate deal on your hands. Now, Kevin focuses on the acquisition price, or how much of a deal is he getting this property for, over the cash flow and the ROI. And I do the same as well. That's how I bought this place, by focusing on the acquisition price, or how much of a deal was I getting this place for, over the cash flow. But wait, isn't the whole point of real estate investing to get passive income and retire early? I mean, yeah, that's why I bought this place. So if I agree with you guys and I want to retire early, I want passive income, why didn't I focus on the cash flow? Why didn't I focus on a 10% return on my money? Why did I focus on the acquisition price as my main priority? How much of a good deal was I getting this place for? That's because Kevin and I believe that it's faster and easier to grow your net worth than it is to grow your cash flow. And it's very easy to then, once you have a high net worth, once you're worth $2-3 million, to convert that into cash flow by paying off your mortgages on your real estate properties or by investing in dividend paying stocks. But if you're just going to try to buy dividend paying stocks straight up and chase cash flow that way, well, you're going to kind of run out of money very quickly. It's a lot easier and faster to kind of grow your wealth with leverage, especially through real estate. And that's why Kevin and I focus on increasing our net worths first. We all have the same goal in mind. We all want to retire early. We all want passive income. Just different methods of getting there. So I agree with Kevin on that part, but here's where I fell into the trap when I bought this place. This is a mistake that I made. By trying too much of emulating of what Kevin does and what Kevin teaches. Kevin lives in California, where the median home price in his area is $600,000. So Kevin is always talking about how he's able to find a deal for $450, put $50K into it, and he's all in for $500, and now it's worth $600,000. So naturally we see, right, if we agree with this theory of ours and our method of saying that, hey, it's faster and easier to grow your net worth, then turn it into cash flow, you'd probably want to do the same as well. Try to get the biggest spread on your deal. Well, that's hard to do if you don't live in California or New York or Seattle or a high cost of living area where the home prices are high. It's hard to do when you live where I do in Orlando, Florida, or if you live in Tennessee or Georgia or the Carolinas or anywhere where the median home value is maybe closer to $250,000 or $300,000. Because it's a lot easier to get a big spread on $1 million property, to buy that property for $700,000, maybe put $80K into it, and boom, you're all in for $780,000. And the property's worth $1 million. Try finding a property that when it's all fixed up is worth $300,000 and try buying that property for $100,000. Not gonna happen. And so what does that force you to do? Well, it forces you to try to buy a bigger house because you can still find those spreads in these markets. It's just all about the price point. So if the median home price in my area is $300,000, well, I might have to go target something that's like worth $400,000. So that means instead of buying like a 3-bed, 2-bath, 1,500 square feet, the median size home, I'm buying something bigger. And that's what I did. I ended up buying a place that's almost 2,100 square feet, 4 bedrooms, 2 baths, half an acre lot with a swimming pool. And the problem with that a lot of people don't realize is that when you're trying to bank hack, which is one of the best ways to grow your wealth, remember, leverage is really going to help you increase your net worth fast, which you can then turn into cash flow. The best way to leverage your money is by bank hacking, which means you buy a property as an owner-occupied resident, so you only have to put 3.5% or 3% or 5% down. And then after living in there for a year, you can rent it out, move into another property, and do the same, only put 5% down. Now you have 2 properties, and you put down less than you would have to put down on 1 rental property. But in order to bank hack, in order to move into the next one, the banks need a reason as to, okay, why are you moving? What's your reason? Why do you want to buy another place? And a good reason that they'll almost always accept is that I need a bigger place. Do you know the hassle it's going to be? I don't want a bigger place. I mean, the yard on this place, trying to mow it every single week, a half an acre lot, sucks. The utility bills on this place are high. The payments on this place are high. It sucks. And the last thing I want is a bigger place. I want to downsize. So I have to have a better excuse and a better reason as to why I need to buy another place within a year. Now, if you were to buy a smaller place, you would have no problem. But if you buy a smaller place, let's say you get like a 2-bedroom condo or a townhouse, the fixed up value isn't going to be $300,000. You're like $220,000, $230,000. And guess what? Your spread's going to be even smaller on that than what I got on this place. So on this place, I was able to get a $50,000 spread. On a 2-bedroom condo, you might get like a $20,000 spread. And Kevin, if he saw that deal, would probably say, nah, not a good deal. I would look for something better, especially in this market. But I wouldn't. For your first deal, I would jump on that. And here's why. This property, as my first one, has been so stressful. I mean, trying to renovate a whole property with no experience by yourself that's this big, it's a lot. Not to mention, it's expensive too, because the paint that you buy, the flooring that you buy, all these materials, they're based on the square footage of the property. So things will be a lot cheaper. Your renovation costs, your fix-up costs will be a lot cheaper if you buy a smaller property. Your payments on the property will be a lot cheaper because it's gonna cost less to buy. So by buying a smaller property, you're gonna be able to save more money. And the problem with this property is that I'm like at break even. So it's pretty hard for me to get out of this property and get into another one without using a HELOC or making more money. So if you were to buy a smaller property, you might not have as much equity, right? You might buy, let's say, a condo or something that's worth $200 fixed up, but you get it for $175 or $170. You put 15 into it, you're all into it for $185. Boom, you only got a 15K spread, and you're like, yeah, but Claude, I want a 50K spread like you, or I want a 100K spread like Meet Kevin. If you live in California and New York, go for that, do that. But if you live in like Florida or Georgia or Tennessee or these other states, go for that condo, because you're gonna be able to save more money than me and get another property. And once you have 2 or 3 properties under your belt, then start to chase those big spreads, because then you have more money, you have more leverage, you have HELOCs, you're probably making more money. Now you have cash flow. I mean, once I rent this property out, I will have cash flow. I'll be making $200-300 a month from this property. But trying to get out of this property is gonna take me a bit. So I would encourage you guys, if you see the value in what Kevin's saying and what I'm saying, that yes, we're on the same page, we want to get passive income, we want to retire early, but the fastest method to get there is by increasing your net worth. Get a balance of that. Don't be too eager like I was, and don't buy a really big property that it's gonna be kind of tough. I mean, it's gonna be a lot, it's gonna be stressful. Get something small, get something that you can learn on, get something that it's not gonna take you 3 months to renovate it by yourself, something that you can renovate by yourself in a month. I mean, I'm sure this property will be worth it in the end, but look, buying something this big right off the bat and trying to do all the work yourself, it's not for everybody. Start a little bit smaller, and you'll probably be able to buy more properties than me faster than me. Yeah, you might have a smaller net worth at first, you might not have as big of a boost, but in the end, it'll even out, or you might even come out on top. So that's what I would change different, and about Meet Kevin's method, and I think that Meet Kevin, I don't think he would disagree with what I'm saying here. I actually think he would agree. He's just never clarified this point. And that when you're looking for your first property, it's okay to get a smaller wedge. It's okay to only be up $15,000. Just get in. The most important thing is getting in, because now you're getting that appreciation, that principal pay down, and that's gonna build your net worth. And as long as you don't ever sell that property, even if you bought at the height of the market and it crashes the day after you bought it, if you don't sell it and you hold on to it for the long run, you will be up in the end. So follow those methods, guys. Just the main thing is to get into real estate and just try to get something below market value, but don't worry about how much. Don't try to emulate what people are doing in California or what other people are doing buying really big houses. Just do what you can afford and get into real estate.